Today I want to explain how we're close to the AMC squeeze, and actually I want to show you just how close we were to a market crash triggering the squeeze in 2022, as well as a whole host of other information today, so stay tuned and let's make some money. Also guys, just a quick one, the Valentine's sale at the Millionaire Mindset Trading Group is now on, and I've actually expanded the group to include not just the fast moving trades and the options trades, but also my long-term portfolio. So you can see the stocks I'm invested into for the long term if you don't have the time to day trade every single day. We actually just sold out of our Palantir shares that we bought many months ago for a 100% gain. So be sure to use code Valentine's, all in capitals, at the checkout for $100 off the price of the lifetime membership or 30% off the monthly membership. So let's dive straight in with the key information. We can see from this chart that Volkswagen squeezed on the 25th and the 28th of October 2008. As I've said before, this squeeze was caused by the overall market crash. Many hedge funds out there were underwater on their long positions and had to close out of some of their positions to ensure they weren't margin called. This, coupled with the Porsche takeover news, meant that tons of Volkswagen shares were all locked up, and these shorts had a really tough time getting out of their position before it got a whole lot worse. Many of these shorts did have their entire portfolios liquidated and their hedge funds collapsed, and other hedge funds narrowly avoided collapse. Now we can see that in 2008, the market actually peaked back in October of 2007. Between then and the 28th of October 2008, the overall market fell 46%. What this basically means is that it took a 46% drop for many of these hedge funds to be in such dire straits that they were mere days, hours, or minutes away from collapse. And to avoid collapse, they had to desperately close out of positions long and short to meet margin requirements. And one of those shorts they closed was in Volkswagen. Now, back in 2022, the market fell 27.5%. Not enough to trigger mass hedge fund collapse, but just how close were we? Well, if we overlay the 2022 drop here in red over the 2008 financial crisis, we can see that we weren't actually that far off from mass hedge fund collapse. If the market continued falling just a few more days, just a few more percentage points, many of these hedge funds would have collapsed or would have been so close to a collapse they had to close out of all of their shorts. Not just the smaller shorts, but even the bigger shorts like GameStop and AMC. It's actually really interesting when you do overlay the 2022 drop over 2008. We can see for the remainder of 2007 and for the majority of 2008, while the market was falling, it was falling in a controlled fashion. Throughout this entire period here, there's only 1 or 2 days where the market fell by more than 2%. But as soon as we get past this section here into early October, all hell breaks loose. We've got days where the market's down 7.8%, where the market's down 5%, where it's down another 4% and another 7% on top of that. If in 2022 we continue to see some of these crazy red candles where the market drops 5, 6 or 7% in a single day, I think that absolutely would have caused the squeeze and at the very minimum, mass hedge fund collapse. I've said since December of 2021 that a market crash, I believe, is the only thing that's guaranteed to cause the squeeze. Obviously, over the last couple of years, I've touched on tons of squeeze catalysts, but I've always said that a market crash is the only thing that's guaranteed to cause the squeeze. And what's really interesting is that right now in February of 2025, the market is showing tons of signs again of being overvalued, just like it was in November and December of 2021 and January of 2022. Now, something else I also wanted to talk about today is this video of Elon Musk that I've not seen before. Obviously, we've seen tweets from Elon Musk talking about the SEC and talking about GameStop as well. Elon in the past has tweeted about how the SEC is of course the short seller enrichment committee and how he was forced to settle with the SEC and pay the fine to save Tesla's life. But I've never seen this video of him on the Lex Fridman podcast.
Not once did the SEC go after any of the hedge funds who were nonstop shorting and distorting Tesla. Not once. They would lie flat, the hedge funds would lie flat out on TV for their own gain at the expense of retail investors. Not once, literally 1,000 times. Not once did the SEC pursue them.
How do you explain this failure?
The incentive structure is messed up because the lawyers at the SEC are not paid well. It's a fairly low-paying job, but what they're looking for is a trophy from the SEC. They're looking for something they put on basically their LinkedIn.
Yeah.
From that, they can get a job at a high-paying law firm. That's exactly what the lawyer here did. And the reason they don't attack the hedge funds is because those hedge funds employ those law firms. And they know if they attack the hedge funds, they're affecting their future career prospects. So they sell small investors down the river for their own career. That's what actually happens. Regulatory capture.
Regulatory capture.
Yeah, not good.
That, I think, perfectly explains the SEC and why the SEC or individuals at the SEC don't go after hedge funds. These hedge funds go on live TV, shorting and distorting companies, often with fake news articles. But individuals at the SEC don't go after them because those individuals at the SEC want to go and work for big law firms. And of course, these big law firms are employed by hedge funds. So that individual at the SEC won't get a job at a big law firm if he goes after the hedge funds, because the law firm will effectively blacklist them. And also the law firms themselves don't also go after hedge funds and try and sue the hedge funds, because it's those hedge funds that are actually employing the law firms. I also wanted to go through today's trade from the Millionaire Mindset Trading Group on stock AIFF, which ran 140% from the entry. You can see not only did I tell the group that I was waiting for AIFF to break $4.77, but Luke's was also watching for a $4.60 breakout, and Harhan also told the group exactly when he bought AIFF as well as myself. So you can see there was multiple alerts from multiple people in the group, and tons of the members profited as well. Harhan of course locked in a 54% gain, JJ made a few profitable trades as well, as did tons of other members. So guys, be sure to join the group using the link in the description below, remembering to use code Valentine's, all in capitals, at the checkout for $100 off the price of the lifetime membership or 30% off the monthly membership. But I think this will soon all be cleaned up under President Trump, and of course with Elon Musk and his DOGE DOGE committee. You may have seen that President Trump has just said that Elon Musk's DOGE or DOGE committee may have found fraud in treasuries. As a result, President Donald Trump has now instructed Elon Musk to hire 45 new DOGE agents, handpicked at his discretion, toward the FBI, the CIA, and the Pentagon. Trump has claimed that these agents are expected to uncover hundreds of billions of dollars in fraud and abuse. And Elon Musk himself has suggested that he and DOGE may even audit the Federal Reserve. Now, to me, it only makes logical sense that after auditing the CIA, the Pentagon, the FBI, and the Federal Reserve, the next two agencies to investigate are the SEC and FINRA. I think investigating the SEC and FINRA is an absolutely brilliant idea, and I'm sure it would uncover tons more abuse and potentially even fraud as well. It'd be a great way to get the SEC to stop going after these small, petty criminals and to go after the big hedge funds instead. Now, finally for today, something else that I found really interesting and something that shocked me is this news article from Charles Schwab. Of course, just a few weeks ago, Citadel sold $1 billion worth of bonds, and before that, has sold portions of Citadel directly, selling off equity in the company. And now Charles Schwab has just announced a pricing of $13.1 billion in a secondary offering to sell more shares in their company. It seems Charles Schwab, the Charles Schwab Corporation, needs an extra $13 billion because they're short on cash. It's really interesting, all of these hedge funds, market makers and trading platforms seem desperate to raise billions of dollars in equity. I can only wonder who's going to be next. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.